Okay, what an insane week this was. I seriously can't believe it happened not once, but twice. Welcome back to the show, and today it's going to be quite an important episode. The portfolio has taken a deep dive. And many of you have actually reached out to me on Twitter at Ozbourne Foreman asking if I've changed my holdings at all due to the intraday drop of Boohoo by double digits. So the plan is for today to talk about the market moves, my holdings, did I panic sell? I'm also going to pick apart the article that sent Boohoo's share price crashing and explain why I don't necessarily agree with the points made by the media, and in return I ask you to drop one of these for the YouTube algorithm. The FTSE 100, aka the largest 100 companies listed on the London Stock Exchange by market capitalisation, has dropped by 0.59%. FTSE 250 has actually risen by 1.21%, and my portfolio has actually fallen by minus 1.91%. Not bad considering more than half of my portfolio is allocated to Boohoo stock. I suspect that the changes in the UK market are actually due to the rising pound, which is gaining against the dollar and the euro. However, that might sound confusing to you, so I'm going to briefly explain why. Since 2015, as you will already know, we were on about Brexit and we got the referendum done in 2016. However, since then, investors and subsequently a lot of people have therefore priced the pound down. I therefore thought that the pound was severely undervalued because of this, and it was ridiculous not to invest in UK stocks and benefit from the rise in the pound. However, the FTSE 100, you don't necessarily benefit from a rise in the pound, as these companies are already globally diverse. And this means that basically, since they are globally diverse, they're making money in different currencies, meaning that their spending power is now increased with the UK, but it's likely that they're making a majority of their income from outside of the UK, therefore negatively impacting or can negatively impact their earnings. However, for FTSE 250 stocks, since they're more domestic to the UK, meaning they make a majority of their income in the UK, they benefit from a rise in the pound, as that gives them more spending power and options to expand abroad should they want to. And that's why the FTSE 100 has decreased, where the FTSE 250 has risen. And I speculate it's very due to the pound. And honestly, this is a trend that I think will continue to happen. I believe the pound will continue to strengthen after Brexit, as there's more certainty around it. Even though there's a bigger chance of us leaving with a no-deal Brexit, that's a lot more certainty than it was a few months back, where everyone was like, well, are we going to leave with a deal, without, are we even going to leave? This means that actually two of my stocks in the portfolio have somewhat hedged my losses against Boohoo. The first one being Softcat, and yes, I don't own much shares in this stock at the moment, and only 6. However, they've managed to rise by a considerable amount simply because their business model is extremely durable and resistant to the pandemic, and as well as the fact that most of their earnings are in the UK, so a pound increase is beneficial to them if they wanted to expand out globally. In the last 5 days, they've managed to increase by 6.6%, and I plan on building up this position, but not quite yet. In September and October, I'm going to massively build up this position, and that is due to the idea that in November they release their results, and therefore I want to get in as much equity as possible beforehand, but there's bigger priorities in the short term. But since they have increased by such a considerable amount over the last 5 days, this does mean I'm likely going to be averaging and buying up more expensive shares, bringing my average price per share upwards, therefore reducing my potential gains in the future, but I'm not worried about this because I plan to hold long term. However, Games Workshop has actually managed to rally quite a considerable amount of 6.5% since their lows in August 19th, in which I was able to cleverly or luckily purchase more, and I bought 5 more shares during that time point, and now they're up 6.5% since. GAW takes up nearly a quarter of the portfolio, so it's understandable that since this has risen, it has effectively hedged my portfolio and reduced my downside with Boohoo. It takes up 24.2%, which is now up £290 or 11.74%. As I mentioned, on a near routine of a basis, every weakness they present in the short term, I will see that as a buying opportunity and use that to build up my position as they slowly start to increase in share price, which I believe will happen because they're a well-managed, high operating margin company with great future potential, as well as an excellent quarterly dividend. And 60% of you watching this right now aren't subscribed. It is free and it doesn't cost a penny, so please consider subscribing. Thank you. On Friday, there were massive red flags raised against Boohoo, which had led to a mass panic and a huge double-digit sell-off of the stock. Here's what they said, why I don't agree, and what I did with my Boohoo holding. The fast fashion retailer Boohoo has been selling clothes made by at least 18 factories in Leicester that audits say have failed to prove they pay the minimum wage to workers, a Guardian investigation has found. More specifically, they mentioned that third-party audit reports produced over the last 4 years make claims of critical issues over record keeping and working hours at the time they were written, suggesting in parts of their supply chain maybe workers may be paid as little as £3 to £4 an hour. The first thing that had come to my mind about this article is the fact that these reports had been built up over a period of 4 years. So how is this recent news? Why are people panicking? Why is it they now chose to release this data? What makes it more interesting is that the suppliers have not actually been proved to have done anything wrong. They've just not provided data that they pay over minimum wage to their workers. So it feels like speculation. How can we believe that this is authentic data when I could simply email different factories in Leicester asking for them to prove their payments? They will then realise that I'm a nobody, will ignore me, and therefore I could say, well, you know what? They ignored me. I spoke to 10 different suppliers. I'll put Boohoo on there as a brand, as therefore I'll get clicks on my article. And then since they failed to respond to me, therefore there's conclusive evidence, and I'm therefore going to suggest that Boohoo are paying their employees £4 an hour. And then there doesn't have to be validity in the media because apparently that's how UK media works. However, they have mentioned an audit, which would sound very formal. Yet they've not spoken about who the independent body is, perhaps by regulation, and they've only said that simply that they were a third party. Notice that they've not mentioned the word official in any way to describe this audit. They've simply said it's a third party independent body, suggesting to me that they've potentially done it themselves at The Guardian, and they've also added that little cheeky one-liner at the end suggesting that their workers could be paid £3 to £4 per hour. But where did they pull that figure from? They then proceeded to talk about an MP. Claudia Webb, the MP for Leicester East, where many of the factories are based, said that the allegations suggested an unforgivable breakdown of our basic social contract and called on Boohoo to urgently release its full list of suppliers in the city. Adding an MP to the article certainly makes it sound a lot more official. However, have you noticed that she's also asked for the full list of Boohoo's suppliers, which means that Boohoo are very likely keeping this data withheld. And I think this is a wise move, even if it's less transparent, because it means they can address the problems before the media gets to it, overinflates it and causes panic. And also, by flexing my C grade in GCSE English, I'm very proud of it, thank you. You can also notice that that last part wasn't quoted, and that I can't seem to find any substantial evidence whilst looking through multiple articles provided by The Guardian that this MP Claudia had even mentioned about that Boohoo supplies a full list. This could be a hyperbole in which the article, or the writer for the article, has exaggerated their point to make it sound more authentic and also with more authority. But then this means to me that the independent audit can't even guarantee that the factories that they spoke to were even under Boohoo's brand or suppliers to Boohoo without first requesting the information from them, which suggests to me that they were just doing random sampling, and therefore they were just picking random factories in Leicester and then claiming it to be linked to Boohoo and other brands, not just Boohoo, other brands. And how can we in fact believe that 18 of these factories were in a link to Boohoo? Where is there concrete evidence behind this, as they're not showing it to me? Remember how about a month ago Boohoo was accused of modern day slavery? But then if you'd have read the article, it was a loose accusation to a subcontracted supplier that didn't supply Boohoo, but rather supplied the co-founder's brother's website. Doesn't this feel like the same point is just being repeated, but with ever so slightly differing angles to make it sound like this is such a serious issue? And therefore, how can Boohoo keep track of potentially thousands of different suppliers and subcontracted suppliers when they're also trying to market their products? Is it really the liability of Boohoo, and therefore they must be looking over it with a keen eye? Or is it down to the local authority or government? As this isn't something that's new in our world. Do you remember the scandal with Primark and their slavery allegations, or even Sports Direct? However, Boohoo had supposedly admitted that they had some issues with some suppliers, and that they had suspended trading with the suppliers until they had become more complacent and transparent, which suggests to me that when they do release this information, it may not be as perfect or as clean as a lot of the investors are hoping for or are assuming it will be. And so this does add a little bit more risk into their results, in which they'll announce this on September 30th. It would only be fair to highlight this for investors of Boohoo. as they were very likely aware that this was ongoing, but chose at the time to just keep a blind eye to it and not directly look at the issue. But in fact, this might actually be an advantage of Boohoo by not providing any guidance, any RNS updates, and so they can keep the share price lower so that perhaps people they know, perhaps the directors might even go for another purchase, get it in at a fantastic value and watch it rally up. But also the fact that there isn't any information on this may put some more risk into it, because obviously they've kept very quiet. Perhaps this is really, really bad, but then surely you would watch the director start to liquidate his stake, as he has about a 17% stake in the company. I think that they're going to keep quiet, and therefore people can keep purchasing shares at a cheaper price, and then it may significantly rally at the end of September. However, the biggest point brought forward by the article, and that could seriously cause some concerns, is this: workers not clocking in or out for their shifts, suggesting that they worked for longer than officially recorded. Discrepancies in working hour records make it impossible to verify minimum wage due to hours set out using informal, handwritten notes instead of computerized timesheets. This is a solid point until you realize that these actions were very likely taken place independent of Boohoo, because these suppliers don't exactly just work under Boohoo, as ultimately these suppliers are their own businesses and they ultimately seek out to find their own contracts, and some of them had gotten a contract from Boohoo, which means that the only thing that tethers Boohoo to these suppliers and the subcontracted suppliers of suppliers is the fact that they were supposedly creating garments and products for Boohoo and other brands. Notice the emphasis on other brands. This could be very loosely tied to Boohoo because they can name drop that and therefore get a little bit more popularity and controversy on it. And to be honest, clothing suppliers in the UK are likely going to have this issue no matter what they do to try and regulate it. And unless we have significant law changes and funding by the government, it's likely not going to change and therefore be extremely difficult to deal with, meaning like it has in the past and it will very likely happen again in the future once everyone has currently forgotten about this slavery allegation. I wouldn't even be surprised if they've already written their articles 4 years in advance. But what puts Boohoo in an excellent position to deal with this without government help, and therefore puts them well above their competitors, and this is the fact that they'd spent £3 million purchasing a 2.5 acre old car factory in which they plan to turn into a state-of-the-art clothing and textiles factory, which tells me that they're going to actually have the garments made themselves. Their operating margins are high enough, it does not matter to them whatsoever. So instead of going through these suppliers that are doing dodgy things, they can do it themselves. Then what they can do is move the rest of their factories and have them abroad. Therefore, they can continue with their test and repeat business model, in which they'll test a product, they'll make maybe 10 to 100 different items of clothing. If it sells well, they can have more shipped from abroad. And with their business model, this is actually a very effective way of doing it. They can get the short-term demand to the market from having a UK factory, and then they can have everything else abroad where they increase their operating margins. Once more, I see this as another attempt to short Boohoo, and an attempt that actually was successful. And they timed this before the £10 million independent investigation results are released. And so this is the best time for them to really impact shareholders, so that they can shake the trees, hit stop losses, whilst also gathering plenty of clicks so that their article does well, as it is a very controversial topic on a huge brand. However, I think there's an error with what the media have done, and it's that they've not targeted clicks of the consumers of Boohoo, which are 16 to 40-year-olds. Instead, they've targeted clicks from the shareholders of Boohoo, and those aren't the people you're going to want clicking your article, simply because they're a lot more well researched. However, this gets much better. The people that would consume Boohoo products are the same people that get their news from social media pages. They don't go to The Guardian, they don't go to The Times, they don't go to The Sun. They get it from independent parties on social media, in which Boohoo can already have a significant influence over. All they have to do is pay them. And the timing of this article, I will give them this, is timed to perfection. They'd managed to do it just before investor sentiment had built up, and then timed it with the bank holiday weekend, meaning that the stock market won't be open until Tuesday next week, and therefore they have a lot more time to start writing out more articles and build up the panic levels. And therefore they could potentially spook out these newer investors that are still fresh in the stock, haven't done their research, and they may sell out on Tuesday. For me personally, Boohoo stock is a very, very easy solution. and therefore I've decided to continue holding this stock. After all, why would I sell it at a discount from what I could have sold it the day before? If I didn't already have a position with Boohoo, then I very likely would have used this as an opportunity to get in. And I hope that if you're a newer shareholder that you did take advantage of this. There has been 3 different opportunities to get in: the pandemic crash, the modern day slavery crash, and this weakness of a correction that is still slowly, it's not recovering very well. However, my reason for not buying more shares is simply because I'm overexposed to them. And there's a lot of systematic risk. I'm not really too worried about that. After all, I did just take a double-digit drop and, oh well. The issue is that because they take up 50% of the portfolio, that's too much riding on one stock. And that's exactly not what I want in my portfolio. I want it to be more balanced between a healthy group of companies in which they all contribute in their own way, not majoritarily dominated by Boohoo. And so my plan is to not sell Boohoo because I feel that would be wasteful, although taking profits you don't lose money with, but rather to rapidly build up my other positions around Boohoo and hold them long term. However, you will notice on the left side of the screen, approximately there, perhaps I've jolted to the side a bit, that it says that I actually sold 16 shares of Boohoo. You may be wondering, why? That's ridiculous. Do note the date. This was a while back and I'd accidentally purchased too many shares using the Freetrade app, which got me well over 2,000. I bought 2,016 total and I wanted a flat 2,000. And you may sound, well, that's ridiculous. Is that just like because you want to be quite OCD about it? Well, no, it just makes my calculations a lot easier because I can just multiply things by 2,000. And also, I didn't actually mean to invest that money into Boohoo, and so I just sold that small amount and reinvested it into another stock, which I think at the time was actually Ashtead Group. As for this week, I've been putting my weekly deposit into Halma, and this was actually before their ex-dividend date on the 27th, meaning that in October there's going to be a small dividend payment of around £2.84, as it is my lowest dividend yielding stock in the whole portfolio. Halma has an AGM, or an annual general meeting, on the 4th of September. So what I'm trying to do is build up the position beforehand, as I have good hopes for it. So I'm planning to deposit more money into them beforehand and try and raise my equity to £1,000. However, the one thing that will stop me from depositing more money into Halma is Ashtead Group drops below 2,600 pence per share, and it is very, very close. Very similar situation. They released their Q1 results on the 8th of September and also their annual general meeting, and in which point I want to build up more equity because I'm more bullish on this company and I think they've got a very resilient business model, and that the market hasn't noticed this, and it's currently trading at a price to earnings ratio of like 16 when it could be trading at much higher multiples. And also in the short term, it's starting to look like it's on that decreasing trend, in which I'm going to jump in. I'm going to put quite a bit of equity into it and bump it up, even if I am temporarily overexposed, because I could then build up the other positions around it. My only issue with this company is that they're not paying a quarterly dividend, and I hope that as around 10 of the FTSE 100 companies had transitioned to that, the Ashtead Group will be one of the adopters of this as well, since they are doing quarterly reports, and that's not standard in the UK. AHT has dropped by minus 3.66% this week, which puts me very close to buying more. For the London Stock Exchange Group, there is still the ongoing Refinitiv deal, and there currently the share price is held up heavily by speculation. I don't like this, I like the stock. I'm not going to be buying more though, simply because I want more certainty around whether this deal will be happening. Hence why I'm reducing my target allocation from 15% to 12.5%, which it is currently around about sitting on. For the 2 viewers still watching this video, upcoming this week on Tuesday, I will be doing my stocks to buy in September. On Thursday, a mystery video around Trading 212. And if you're interested in my Vanguard Life Strategy Fund review, then click the card at the top right of the video. This is the Ozbourne Foreman Show. Thank you for watching. Have a great day.